Hello guys, welcome to the Trading Parrot. It's midday in UK time, and since yesterday what we have done is to manage to reclaim this area in here on the 4 hour. That means that possibly what we have done post the cut of 25 basis points from the Federal Reserve is just a fake out, a bear trap if you want, and at the moment we are holding that level. The next thing that we need to do is to move the support in here and call the new support somewhere around 44. That on the price, we need to update it on the reverse RSI, and it's coming in at 44, which is pretty much 90k. So basically on the 4 hour, we have pushed our support to 44, giving us additional headroom to move. To be fully honest, on the 4 hour, my preference is to now hold 91 because that is the most bullish area of the point of control. If we stick above the point of control, we are in the bullish area and we have the highest chances to hit the resistance at 93,600 or 94k, like many other traders are calling it. We are doing everything we can literally to try to go for the liquidity on the short term. As you can see in here, that is sitting between 94,500 as of today into 95.3k. It sharply declines into a vacuum, which I qualify as the challenge. If we manage to stick our hands into this liquidity, what we have to do is to stick around here without coming back below that potential neckline breakout. I'm talking about this horizontal resistance. If you go there, let's not do the typical bull trap, which will play out typically as a liquidity hunt, doing something like this and then the rejection to the downside into the lower liquidity, which is actually pretty decent. Instead of that, what we want to be seeing is a clear breakout with retest and further continuation into ideally above 100k. Now, many people are thinking that that is pretty much impossible to do. We are approaching now a weekend, and on CME, that means that we need to ideally use any positive moves on Friday to close as high as possible, creating some sort of insurance of price being at the highs, creating potentially a CME gap below us or as high as possible. In case over the weekend we have some profit taking, then we have that gap above us to bring us back up. That's kind of the setup, bullish of course. If before the close on Friday we start breaking down, and by candle close on Friday, or actually on CME close, which is before the candle close, they go offline slightly before, I think it's at around 8 to 9 p.m. UK time. If we close too low, then we kind of get an insurance that we are going to come back lower if we were to pump over the weekend. Let's go and look at the daily time frame. On the daily time frames, no news on the front. Pretty much the whole week has felt like if we were playing with this story of Peter and the wolf, where Peter is constantly saying that the wolf is coming, but it never does. Well, pretty much that has been my full week. We get very close to that resistance in here. We ring all the alarms that we are potentially about to break out and to confirm what the momentum has already done on the daily. And then we get another day, we try again. Third day, we try again. Fourth day, we try again. And you know what they say about resistance. Eventually, if you keep persistent, something is going to happen, right? And I think the primary goal of this move to the upside, if I want to be very conservative, literally is to take that liquidity in there. I cannot take really for granted what happens after and if we take the 96k. That could be just a liquidity hunt. Now, if it holds, that level of 94 as support for a few candles on the 4-hour, or for at least one day with a green candle. There you go. Particularly if we stick our nose into 97, 98, well, why are we there? There is no much liquidity. That means we're going for the 100K, but literally there's no much more than you can really say about the setup. There are no guarantees I can give you. So if you're looking for an additional source of confidence, I'm afraid there isn't such a thing. After all, we have a breakout, we have tons of daily signals in here that we're calling for upside. We already have upside. Those signals do not guarantee how much upside we're gonna get. We did get the upside. The breakout has done great things. Now it's time for the price to decide if this rolling over is the end of the story, or if we are really gonna go for the top of the range. So far, nothing is broken. We are just pretty much doing a 4th attempt in a row, and we have fuel and motivation to go into those highs from the liquidation levels in here. Something I haven't covered in a while is the aggregated open interest. Remember about these head and shoulders that has a target of the total aggregated open interest across all exchanges into $17 billion. That coincides more or less with the 67K target. Well, there's been some progress, right? We broke down in here, we lost another level, and now we are currently testing a new level down. So really price has nothing else to do at this point in time apart from going back into the 31 billion and proving that after getting there, it's ready for another move of upside of open interest. At the moment, there's literally no interest in trading Bitcoin, and that is why we are seeing sharp declines in the open interest. Those sharp declines of these proportions have happened at the end of 2024. You can see it from December. We sharply decline in here. We have a second leg down, and we move pretty much from 35 billion down to 22. This time we have declined from 45 billion down to 27. Okay, we are getting close to halving the open interest in the cycle. And look at how it did decline in 2021. It sharply declined from 17 back down into 8, and then it had a dead cat bounce into 12, just to finally fully reset at $6 billion of open interest. So that sets kind of a stage of what we could be expecting, but as well, I want to state that this move down is pretty much down only. So open interest eventually needs to do a dead cat bounce in here, in my opinion, unless you agree that from 31 to 35, that was it. I think in here, my expectations is the open interest to go from 27 at the very least into 32, 33. And at that point I say, okay, fair enough. We got our dead cat bounce of the open interest. We can now close the curtains, close the shop, and go for holidays for a full year. To be fully honest, during today, on Friday, ideally, I want to see the price action breaking out this resistance at 64. And I would like to see that we stick around there, not just in the price, but also in the momentum. Holding above 65 RSI on the 4-hour will be significant, because as you can see, this yellow line has been respected pretty much from October, beginning of October, that we don't break that line, and we haven't even cheated yet. I think we move it once. So from this day, we move it in here, and we have kept the line just like that. So there has been so little cheating. When I mean cheating, when we move the line sharply like that, then that it's cheating. But so far it's respecting it, and even if you place it like that, you can still see that is the resistance. So holding above 65 will be significant to forecast that we have chances of getting into 84 RSI. Now, where is that 84? I wonder why it's not appearing. Oh yeah, it is precisely there in the chart. Let's magnify this. And as you can see, today is coinciding with the technical target of all these triangles. So the triangle points from 93,600 all the way into 166, and the RSI is calling for 106. So next in the video, we need to look into some news. We need to see what we find at 107, whether that liquidity has increased or not. All of that is relevant. And don't get me wrong, looking at a momentum not broken, my responsibility is to still look for areas of upside. That doesn't turn me into a person that is massively bullish, okay? If it's not broken, then squeeze more juice out of it, right? That is the mentality of a trader. It is not FOMO. It is not unnecessary bullishness from me. Oh, we are going to 107. Guys, open along. Do you see me doing that? No, I'm just holding my existing bleeding long into that situation because this hasn't broken. Some people think that because I see this not broken and I look to the upside, it means that I'm really bullish. There is a twist around that. There is a caveat. It is not that direct, the conclusion. The moment I was bullish was when we had to move the global support from here to here. And I told you and I shouted throughout the full week. I said before we got there, if we pinch that level, that is a global pinch, global support. The last time we did it is in August, and I repeated like a parrot. That is my job, to tell you when there are those opportunities. At that point, you accumulate. At that point, you cross your fingers for a breakout. We did get the breakout, and what we are doing now is just trailing this momentum to the upside. The moment it pinches here, we say, okay, we took a bullet. Now the situation is different. Anyways, let's continue. No news on the front and here on fair value gaps. And are you noticing on my Chrome, I have all the tabs. I asked Claude Code to implement this for me this morning. That's why I'm late with the video, because I really like the idea of seeing all my charts like this, something that Chrome doesn't give you. And I can even go to my other tab groups on Chrome, look at the news, look at general markets, and it's so fantastic to see, particularly for someone like me that has so much data, being able to navigate your data quickly and easy is just fantastic. I took the idea from my phone. My phone offers that. The Samsung one with the browser, and Safari also does, but Safari is just crap with memory management. It kills all my charts constantly. So where are we with this stupid bear flag? At the moment, we are still around the area of horizontal resistance. So I think for market maker, the best opportunity they got to squash and to execute in a perfect way a crash is that if they do it from the top, if they do it from 97, if they go all the way to the top of the flag, or even if they break out from here and get into 100K and they use all of that as a big liquidity hand, that is a perfect recipe for longs disaster. So I'm well aware of that, and if we get into those areas of 100K, I need to execute proper risk management, because at that point I'm back in profit. And I certainly, if I enter profit, I do not want to be part of this leg down, assuming I already enter profit. If we dump from where we are, then I'm happy to add at the lows once we find a new bottom. No news on the weekly, but this Sunday we really need to monitor what's going on with reclaiming the 44 RSI on the weekly. That will be the biggest event that you can ever hope for Sunday if we do that. Let's have a look at liquidations as well. This time I'm going to look at the 30-day in here, and everything looks the same as I left it last night. There is just slightly less at 87. These levels are increasing, which is telling me that more shorts are entering. So let's go into high block capital And let's see quickly the delta, how is it looking? It was flat last night. It was no more upside or downside in terms of delta, but now we are back at having 88K. Well, that's nothing still. So we do not have any edge specifically coming from the delta. If you look at the liquidations of the past month, you can see that we have taken a vast majority in here. This is a full year of data. And when we look at the monthly, we can see that it's pretty interesting going at the very least for the liquidity hand or all the way to the 100K. Order book continues to have resistance as we approach the 95K. Let's go into Market Monkey Terminal. You're going to see that that is still the case. We still have that support. Now it has flipped into 91,500 since the price moved into 92. Thanks to that, we have turned all the price action on the 4-hour into a bear trap. You can see that we have to move this back down in there. Now we have the support at 44. Longs have declined from 67 last night into 60. Of course, that is not necessarily bullish because it means that they have taken profits. But despite the fact that it came back down into 60, the price has gone just sideways. So maybe something is going on there from the point of view of spot that is currently holding the price. Let's go into some news. Remember that the crypto intelligence report is for free, goes out every day, and the issue of today is out. It has analyzed 31 videos across crypto, totaling 282,000 views, which is nothing. Really, there's very little number of views. You can always read it for free. I publish it as a post on YouTube, Telegram, and Twitter, and my Patreon community gets this plus the full report, which is way longer and way more detailed. A few things to highlight from here. So the 40 billion monthly treasury purchases despite relative normally market conditions is the thing that is giving everybody the source of controversy, whether it's quantitative easing or not. I think it's not, raising critical questions about undisclosed economic concerns, while also warning that Oracle's 14%, I think it was 15% crash, losing 105 billion market cap could trigger broader AI stock rotation into crypto assets. That's an interesting take from Gareth. I think if there was a bubble about to pop on AI, rotation into crypto assets is a little bit too optimistic to think. Bitcoin Hyper says that documented Bitcoin's liquidity grab at exactly 94,000 followed by a 5.5 rejection, a classic sweep pattern, and warned the rising wedge breakdown threatens the 89,300 support, with next targets at 85 golden Fibonacci ratio and potentially 83. So you can read all of this. It's going to cover most of the crypto channels. You're always welcome to recommend any other crypto channels that we should use as sources for the crypto intelligence report that currently is offered for free. The three biggest news today: the 4.5 billion Bitcoin and Ethereum options expiring that already expired this morning at 8 a.m. UTC. 39,000 BTC options contract expired with put-call ratio of 1.1 and max pain located at around 90,000. Interestingly, the price was roughly around that level. It actually came from below yesterday and it crossed slightly above that it was supposed to. It should have gone just into the max pain of 90K, but it kind of is now chilling at around 91, which makes a lot of sense. Last time it didn't do that. We were way far away from the actual max pain. Now we need to monitor in the next 2 to 3 days what happens, because now that we don't have the motivation to stay around 90K, what is the price gonna go? Is it gonna start rallying now that it doesn't have that pin, or is it gonna start collapsing? Long-term holders accumulate 75,000 Bitcoin in 10 days. Accumulation wallets added 75 between the 1st to the 10th of December with 40,000 purchased in a single 48-hour window. Bitcoin falls below 90K despite the Fed rate cut. We covered that already. The big thing that is giving people to speak now, people are even celebrating in Twitter, do one sentence. Terraform Labs founder received 15 years in prison for fraud in the 40 billion Terra collapse, one of the crypto harshest penalties. And there's a lot going on around tokenized US equities, starting with Coinbase, that they're about to launch this new offering, and followed by DTCC tokenization pilot approved. The SEC granted a 3-year pilot for asset tokenization on layer 1 and 2. Also, Ethereum gas fees are at the 2017 lows at the moment thanks to the Fusaka upgrade that pushed transactions costs to an 8-year low. So in regards to the wealth absorbing supply as retail continues buying dips, you can see that there is a cross in here in this area, and that means that we are starting to see a little bit more wealth absorbing and short-term holders and retail selling, which is precisely what needs to happen for a reversal to the upside. It's not sufficient, but it's a good sign. When it comes to general markets, we can see in the tech area still a little bit of sell-off that was led by what Oracle did yesterday. These are price closes from yesterday still. Let's have a look at how we are in pre-market. We are slightly below on the S&P, and let's have a look at Nasdaq. Pre-market price is also slightly below on Friday. What I'm interested to look into is, one, the close of the DXY and VIX as well. They are both screaming what could come next. If the dollar gets a breakdown on the weekly, if we close this week like this, that is a breakdown. And that means that we are taking more than a small bullet in here. We have already created a rally from June 2025, and that has done the full revenge rally into the area of 58. Now, if we take this bullet in here, we are decreasing the chances of another dollar rally. And all of this is triggered by what happened this week. Basically, what the Fed is doing and all of that. Notice that the Federal Reserve balance sheet has put a move up. It's sharp relative to what we've been seeing in the past month, but it's nothing relative to all the sell-off that they did prior. So we need a little bit more upside than this to really say, we're getting close or we are in quantitative easing. It is good that it's happening right there at the support if you want. But what we really want is to produce a pattern like this and then to get a big move into a new high. And yeah, once you are there, you will know that you are in quantitative easing, but probably too late. So we need to start monitoring this a little bit more frequently. When we look at all the aspects in macro, I struggle to find things that look very bullish at the moment. As you can see, we have a 6 out of 10 with a cat. Well, that is good. The 10-year yield is at 5, that's just neutral at the moment. Initial jobless claims is at 6, so nothing, even a 7 and 8, nothing. Everything is neutral, bearish, or slightly bullish. And I think they're all compensating and really not giving that climate of, yeah, it's coming, it's about to happen. It's actually kind of the opposite at the moment. Particularly with the Fed Chair Powell signaling only one cut expected for 2026. I think it's going to be the big arm wrestling of the year between Powell and Trump, whether he can squeeze in the new chair and start pushing for a double cut at some point. Also worth noting that people are celebrating that there are new inflows on ETFs, but actually we're getting barely 50, 100. Yesterday it was in the negative again, and we need to really absorb the minor issuance, which is currently 450 Bitcoin per day. So if you don't get to 50 to 100 million positive, basically you are net selling based on the supply. So in a nutshell, nothing has broken with the thesis of this potentially doing another attempt for the breakout and the technical target. Once you break out, in here is the biggest area of risk of the full setup. That area in there is like, you know, too strong. Hold on to your pillow, sweat cold, do whatever you need to do. But watch out with entering there, because that is the main target if market maker really has in the back of their head to dampen you. Now, if it holds, it can get as high. The first initial challenge in that case is 100K, because there's again liquidity around that area, but the total target is 107. So we'll see if we can get really there. It is an interesting idea to take a short around 96K, but you really need to manage your risk and understand that if you go anywhere beyond 98 or into 100K, you could be well underwater if this thing really uses the narrative or the expectations of the quantitative easing, despite the fact that might be just bullshit information anyways. Guys, I hope you enjoyed the video. Hit the like, subscribe, and write down a comment down below to keep helping the channel during these periods where no one is watching. If you're looking for an exchange to take trades, Bluffing is a great alternative. It's non-KYC, so you can open an account in just seconds. And if you use the link in the description, you can get rewards for any amount that you deposit and trade. And people were asking me, can we get yearly subscriptions on Patreon? Yes, and until the end of December, you still have the option to get 40%. I finally managed to get Patreon to accept me to offer yearly subscriptions. So that means that instead of paying those prices in there, you can get a massive discount, and that paid yearly definitely is worth. I am gonna take 1 or 2 weeks of holidays at some point, but if you're staying here for the long run and you really wanna learn trading and get involved in the most cool and honest, effective, profitable community out there, well, here is the thing. This is the big deal. All right, guys, I'll see you on the next one. Take care. Bye-bye.